Welcome to this explainer. Behind every single empty store shelf is this massive hidden trillion-dollar war. Today, we're unpacking the state of shop stock in 2026, which is a topic that quietly dictates the rhythm of our entire global economy. When we talk about shop stock, we're actually looking at two entirely different yet deeply connected worlds. First, there's the literal physical inventory sitting on shelves and inside massive warehouses around the globe. And second, there's the stock market, specifically the financial giants that power this whole retail ecosystem. Both of these worlds are going through some unprecedented transformations and pressures right now, and that is exactly what we're going to map out today.
We've all been there, right? You make the trip, you walk down the aisle, and the exact item you need is just gone. It feels like a minor personal inconvenience at the time, but multiply that feeling across the globe. In the Asia-Pacific region alone, nearly half of all shoppers are walking out of stores without everything they came for, and 63% of the time, they're blaming out-of-stock items. It is a wildly frustrating customer experience, but when you zoom out to a global scale, this minor inconvenience morphs into a catastrophic financial leak.
Okay, let's dive into this. That frustrating empty shelf you just pictured, it actually contributes to a staggering $1.157 trillion in annual global retail losses. That's trillion, with a capital T. Research from the IHL Group reveals this massive figure is part of what they call inventory distortion. Basically, it's the giant gap between what retailers actually have in their network and what you, the customer, actually want to buy. To put that into perspective, the Asia-Pacific region accounts for $642 billion of that loss alone. That is money just evaporating into thin air, all because the right product isn't in the right place at the right time. To really understand how bad the problem is, we kind of have to look at the baseline. Industry benchmarks tell us a healthy out-of-stock rate is somewhere between 2 and 5%. But right now, the global average is sitting at a painful 8%. And when retailers run promotions, that failure rate actually spikes up to 10%. At 8%, a retailer is literally bleeding sales and damaging customer loyalty without even realizing it. In the apparel sector, for instance, over half of shoppers will just walk straight to a competitor when their item is out of stock, even if a substitute is offered. So where's the disconnect happening? Well, the root of this trillion-dollar problem rarely starts at the storefront. It actually begins deep down within the supply chain. In a lot of warehouses today, receiving processes are still partly manual. A worker might log a shipment on a physical clipboard. And yes, people are somehow still using clipboards in 2026, or they're manually typing it into legacy software. But by the time those physical goods actually hit the retail floor, the digital record is completely stale. The system says the product is there, but the physical reality tells a totally different story.
Fortunately, the retail industry is waking up to the fact that this lag is fatal. We're now entering an era of augmented collective intelligence, which is really just a fancy way of saying the cameras, the shelves, and the workers are all finally talking to each other in real time. Instead of stopping to scan a barcode or type something in, workers are using wearable tech and mobile computers that update inventory seamlessly right within their normal workflow. Connected cameras on retail floors are acting like specialized AI agents, constantly analyzing shelf conditions to spot missing or mispriced items and instantly triggering a restock alert.
Section 1, AI to the rescue, and democratizing data for grassroots entrepreneurs. Let's see how AI is stepping up to fix this. And this brilliantly illustrates exactly what we're talking about. The integration of artificial intelligence is an immediate priority right now, with 62% of retailers in the Asia-Pacific region planning to implement generative AI systems over the next 5 years. But the coolest part? It's not just the major corporations using this tech. When a startup called Packworks rolled out an AI-powered system to 300,000 neighborhood sorry stores in the Philippines, the results were absolutely explosive. We're not talking about a slight bump here. Top items surged by 79%, and total sales jumped by 29%. Even more incredibly, slow-moving products saw a 96% sales leap, simply because everyday store owners were finally equipped with the data to dynamically adjust their pricing and promotions on the fly. AI in inventory management is absolutely not just a tool to help megacorporations squeeze out an extra fraction of a percent in profit margin. When you democratize this kind of deep data insight, you are giving local, everyday entrepreneurs the exact same systemic advantages that those retail giants have. Suddenly, they can see the invisible trends happening right in their own neighborhoods and react to them instantly. It just goes to show that democratized data is a massive, massive equalizing force in modern retail. Moving on to Section 2, tariffs, TikTok, and turmoil.
Because even the smartest AI has some serious villains it's fighting against right now. See, even the most sophisticated AI systems are operating in a total pressure cooker right now. Retailers are battling external forces that are completely outside of their control, forces that are highly volatile, deeply chaotic, and capable of breaking even the most meticulously planned inventory models. The first huge external threat is trade policy. On average, 38% of a company's revenue is directly impacted by changes in tariff policy. And with new 50% U.S. tariffs entering the picture, the cascading effect is just brutal. As we speak, 45% of decision makers are being forced to hold excess inventory way longer than they planned to, and 58% are absorbing costs they originally meant to pass on to consumers. The second major threat is the total, unprecedented compression of consumer demand. The timeline from a product being discovered to being completely sold out has just evaporated. I mean, a single viral TikTok trend can 10x the demand for a completely random product, like a specific pink water bottle or some obscure brand of pickles, in less than a week. 1 in 3 shoppers now expect retailers to operate at this impossible speed of social media. Traditional inventory models just cannot pivot that fast. So retailers get caught in a vicious trap. They're either totally wiped out of the viral item, which angers consumers, or they overcompensate, panic buy, and end up massively overstocked on a fad that dies just a few days later.
The third big disruptor? Severe, localized, regional crises that end up rippling globally. Just look at the summer of 2026. In Pakistan, massive inflation caused the price of Independence Day flags to literally double, instantly killing consumer spending. In Baluchistan, organized extortion groups started demanding up to 10 million rupees from supply trucks, threatening severe shortages of essential foods and medicines. And in the UK, a prolonged drought threatened the worst cereal harvest in 4 decades, potentially costing farmers £390 million. Boom, boom, boom. These localized, highly unpredictable events can instantly fracture the global inventory network before the algorithms can even catch up.
Section 3, the Wall Street Barometer. Let's pivot and look at how this impacts Shopify in 2026.
To really understand how all this physical, real-world volatility hits the financial markets, Shopify is the perfect example. They power millions of online stores globally, and as of early August 2026, they commanded a market capitalization of over $160 billion, closing at $123.30 a share. They are essentially the massive, invisible engine running behind the scenes of the retail economy, and that makes them the ultimate scoreboard for tracking how well merchants are actually navigating the chaos and inventory distortions we've been talking about. Now, what's really interesting about this slide is that despite all of this turbulent chaos, Shopify's revenue growth is absolutely blistering. We're looking at a 30% year-over-year jump to $11.56 billion in 2025. They aren't just surviving the chaos, they are actively evolving. Shopify is transitioning from being just a simple e-commerce platform into a full-blown AI operating system for commerce. They're building the exact data-driven tools that merchants so desperately need to survive the inventory distortion and those viral demand spikes we tracked earlier. Yet despite that massive revenue growth, the stock market is definitely showing its anxiety. While analysts overwhelmingly give Shopify a buy rating with a price target of over $148, the stock itself has still been trading about 32% below its 52-week high of $182.19. So why the hesitation? Because investors know that the foundational chaos, the 50% tariffs, the erratic supply chains, the unpredictable social media demand, it's all putting immense, crushing pressure on the underlying merchants. Even the absolute best AI operating system is going to face heavy friction when the physical world it supports is this incredibly volatile. Which brings us to Section 4, the future of retail, and how we actually adapt to this new normal. So the crucial point is this: the landscape has fundamentally shifted, and the old methodologies for forecasting and stocking just cannot survive anymore. First, ignoring inventory distortion is no longer an option when it is actively bleeding over $1 trillion from the global economy. Second, we have definitive, proven proof that AI and democratized data management can completely revitalize sales, even down to the smallest neighborhood levels. Third, the chaos, whether it's wild TikTok trends, extreme weather, or sudden tariffs, it's not a temporary phase. It is the permanent new reality. And finally, the retailers who treat their supply chain not as a pesky cost center, but as a resilient AI-driven system, they are the ones who will secure a massive competitive advantage moving forward. Because ultimately, the future of commerce belongs to the fast and the informed. The technology to map out this chaos absolutely exists, but execution is everything.
So as you look at the brands you buy from every day, or even the stocks you invest your money in, ask yourself, are they really built for the ruthless speed of 2026? Or are they just one viral TikTok trend away from entirely empty shelves? Thank you so much for joining me for this explainer. Keep analyzing the data, stay curious, and I will see you next time as we break down the complex systems running our world.